Hello everyone. Today we are here to discuss about green financing. My name is Shubham Gupta. Me and Smreeti are going to discuss about green financing. So we'll be covering what is green financing, what are the policies which we have in India and international. Also some of the challenges of green financing in India. Then certain factors related to risk of green financing. So we'll be discussing about that. So let's move. What is green financing? So green finance refers to the financial arrangement that are specific to the use for projects that are environmentally sustainable or projects that adopt the aspect of climate change. Environmentally sustainable projects include the production of energy from renewable sources like solar, wind, biogas, etc. Clean transportation that involves lower greenhouse gas emission, energy efficient projects like green building, waste management that includes recycling, efficient disposal, and conversion to energy. In order to meet the financial need of this type of projects, new financial instruments such as green bonds, carbon market instruments like carbon tax, and new financial institutions like green banks and green funds are being established. Together, they constitute green finance. Today, green finance is central to the overall discussion on sustainability of economic growth. Rapid economic development is often achieved at the cost of environment. Dwindling natural resources, degraded environment, and rampant pollution are hazardous to public health and pose challenges to the sustainable economic growth. In order to protect and substantially improve the environment, nations around the world have been increasingly focusing on the use of eco friendly technologies. However, it requires appropriate incentive structure for increased allocation of funds towards setting up or adopting environmentally sustainable projects. Once funds are free from all those conventional industries and are channeled into the green and environment friendly sectors, other resources, including land, labor, and capital, may also follow. This eventually leads to an optimal allocation of resources that support sustainable growth in the long run. In order to achieve all these objectives, target policies of green finance have been formed in major countries. We will be discussing this now, and which involves all the stakeholders of economic growth. So let's move to policies that we have right now. So there are several flagship programs that aim at increasing the awareness and promoting the funding of green initiatives across the globe. So first is principle for responsible investment, PRI. Then we have EP, called Equator Principles for Financial Institutions, United Nations Environment Program, UNEP, and Statement of Commitment by Financial Institutions on sustainability development suggest ways for implementing green finance among the signatories. Then we have TCFD, Task Force on Green Related Finance Disclosures. Then Energy Transition for Green Growth Law, which was passed by France in 2015, mandated the asset owners and managers to report on how physical and transition risk impact their activities on assets. In 2011, Brazil embedded environmental consideration into the bank internal process of capital adequacy assessment by considering lending exposure to the projects containing environmental and social risk. UK Green Investment Bank institution, fully owned by UK government, was established in 2012 for the purpose of green financing. Also, a revolving fund of US $26 billion was set up under the Green Refinancing Scheme in Bangladesh in 2009 to disburse low interest loans to over 50 renewable energy and green industries. And also, Bangladesh mandated the commercial bank to allocate at least 5% of their lending to the renewable energy sector and other green technologies. So these were the international best policies. Let's move to public policy in India. So India started emphasizing on green financing early as 2007. In 2008, the National Action Plan on Climate Change (NAPCC) was formulated. Then the Climate Change Finance Unit (CCFU) was formed in 2011 within the Ministry of Finance as a coordinating agency for the various institutions responsible for green finance in India. In 2012, Security and Exchange Board of India (SEBI) made it mandatory for top 100 listed entities that based on market capitalization at BSE and NSE to publish annual business responsibility reports. In May 2017, SEBI issued guidelines for green bond issuance, specifying the disclosure requirements. And the Ministry of Corporate Affairs imposed mandatory reporting of the progress on corporate social responsibilities under the Companies Act 2013. In 2017 October, report of the Committee on Corporate Governance has proposed that the Board of Directors shall meet at least once a year to specifically discuss strategy, budgets, board evaluation, risk management techniques, ESG, and succession planning. The Government of India offers 30% to 70% on installation of solar rooftop panels. And also, Government of India launched two phases of faster adoption and manufacturing of hybrid and electric vehicles FAME scheme in 2015 and 2019 to enhance the credit flow and also to reduce the upfront purchase price of all vehicles and developing the infrastructure such as charging station to encourage green vehicle production and sales in the country. Then RBI proactive policy measures to promote and support green finance initiatives. It has included small renewable energy sector under its PSL Priority Sector Lending Scheme in 2015. Under this scheme, firms in renewable energy sector are eligible for loans up to 30 crores. So we have this policy again where under this scheme, firms in renewable energy sector are eligible for loans up to 30 crore, increased from 15 crore since September 4, while the household loans are eligible for loan up to 10 lakhs for investing into renewable energy. In report on trend and progress of banking in India 2018 to 2019 acknowledges the challenges in the development of green finance such as greenwashing, which we'll be discussing later in this slide, or false claim of environmental compliance, maturity mismatch between the long-term green investment and short-term interest of investor. So there are some certain progresses and challenges in green finance in India. So if we take the improvements in general awareness consideration, then we can see the improvement has been taken place, and 56% point 60% of the population are actually searching the keywords related to green finance, green bond, ESG, corporate social responsibility, renewable. So you can see the data we have. Now, green lending also taken place, and you can see the amount has increased, and the outstanding bank rate to the non-conventional energy sector was around 36,543 crore, constitutes 7.9% of the total outstanding bank credit, and to that power generation compared to 5.4% in March 2017. So these are the bank outstanding data to the non-conventional energy in 2020. Then we have this green bonds. So green bonds are the bonds issued by an entity which aim at the proceeds of the bonds are utilized for projects classified as environmental sustainable. India started issuing bonds since 2015. Yes Bank came out with first green bond issuance in India in February 2015, which was 1,000 crore 100-year issues. Then several other banks also started this, followed by Axis Bank and then IDFC Bank. The country has issued green bonds worth of 8 billion since January 2018, or 0.7% of total bonds.
So moving further, we will be discussing some of the important factors that is green investment majorly include. So what exactly they include? They include the waste processing and recycling. So the waste processing and recycling, it uses the 5 R's, that is reduce, reuse, recycle, recover, and repair. Next is the biodiversity protection, which helps in the sustainability, the climate change adaptation, renewable energy, which reduces the environmental degradation and increases variable renewable energy share, and then is the energy efficiency and water sanitation. Moving further is the industrial pollution control and other climate change mitigation was discussed by Shubham earlier. Moving further to the next slide. So here we can see there is a graph, a diagram, that is green banking and green financing. So here we will discuss some of the important factors which is there. So the first one which you can see is the green banking. So it consists of 3 R's, that is reduce, reuse, and recycle. Basically, green banking means promoting environmental friendly practices and reducing the carbon footprints from banking activities. So the minimum requirement for the same is the environmental guidelines. So moving further is a proactive financing. So what exactly is a proactive financing? So it gives the customer a way to understand what their current financial situation looks like matches them with the right offer. Moving further, we can see the contribution for the new mechanism, which is again the voluntary actions, carbon offset, sustainable forest rating, respectively. Moving further, in the next slide, what exactly is the context in India? So the PM of India in CP026 Climate Summit announced that India will attain net zero emission by 2070. But till now, India hasn't attained the net zero emission by 2070, but although Bhutan has achieved already somewhat. Next point is India will need approximately USD 1 trillion in additional financing. So India was planning to gain that position by gaining USD 1 trillion, but that was unfortunately not fulfilled by other countries. So according to the Cancun Agreement in 2010, developed countries committed to goal of mobilizing jointly USD 100 billion years by 2020. But ultimately, right now it is 2022, but nothing happened of that sort. So for that, the backup plan which India had was the Glasgow Climate Pact, that is CPO 26, noted that the goal of the developed country parties has not been met. So the financing from the domestic resources, which India did, India's climate action have been so far been largely financed by domestic resources. So according to the India's third billion update report 2021 to UNFCCC between the year 2019, while the Global Environment Facility and Green Climate Fund has provided grant to a total of USD 165.25 million, the corresponding domestic mobilization amount to USD of 1.374 billion. So the two major stock exchange which is mentioned over there, that is India is following. Moving further to the next slide. What exactly is a green finance in public sector? So this is one of the important topic which we are going to discuss today. So importance of technology development and private sector participation in pursuing green growth and green finance. So to incentive private sector, financing from banks and capital market for green growth, we consider various government intervention, including market-based instrument and government subsidies, tax and incentives. So basically, we need both the parties, that is the public sector and the private sector, to enhance green finance in India. So the financing sources from public sector are limited, and we should attract the financing from the private sector as well, like I mentioned earlier. So the private institutions have limited information about green industries, right? So until unless we don't used to get a lot of information, obviously we are not going to invest in that. So similarly, the private institution has less information regarding the same. So governments should try to reduce the information gap by introducing green certificate. So this can be done from government's end by introducing the green certificates. Moving further to the next slide. So there is particular categorization which I have done for on green finance in private sector. So I have categorized into 4 industry, that is retail banking, corporate banking, asset management, and insurance. So what exactly we need to see over here is that in retail banking, the very first point is the home mortgage. So home mortgage is a loan for purchase of residence, right? Similarly, the second point is the energy equity loan, which is again a second mortgage. The third point is the green deposit. The third point is the green deposit, which can see what exactly a green deposit is a fixed term deposit to invest in environmentally friendly projects. So it is like that. Moving further is a green credit card, which is the subpart of green deposit. Now, the next point is the corporate banking. So in the corporate banking, the very first point is environmental risk management. What exactly it is? So it is a systematically identifying credible environmental. So moving to the next point is project finance. Project finance, what exactly is a project finance? We need to understand that what exactly it is. It is a long-term funding for infrastructure, environmental projects like mining, oil, and gas in building and construction. Similarly, the private equity, it is the alternate investment that invests to acquire private companies that are not listed on a public stock exchange. Moving further to the next point is that similarly to the asset management. So what exactly is the asset management? Management is a practice of increasing total wealth over time by acquiring, maintaining, and trading investment that have potential to grow in value. So that is asset management. Similarly goes with a responsible investment, green indices, carbon fund. So now you would be amazed what exactly is green indices. So green indices is measuring of how green a company is. Similarly, the green bond. So you would be amazed to know that Asia has largest market for technology, right? Still, it is lagging with the green finance. Only 2.1% of the investors are investing in green bonds and is better and attractive to investor because of the tax incentive. But still, what are we doing? What rest of the Asians are doing where they are not investing in this? Because only 2.1% of Asians are investing in this. Moving further is the carbon bonds. Carbon fund, what exactly it is? So it provides financial and technical support for clean development mechanism project. Similarly, is the CAT bond fund, which is a catastrophe bond. In this, you raise money for companies in the event of a natural disaster. Moving further is the insurance, in which it is auto insurance, carbon insurance, and business insurance. So business insurance is protect business from any financial loss or damage. Moving further to the next slide is public-private partnership in green finance. So the demand for funding in order to shift to the green growth economy is enormous. It is truly, I'm telling you, it is increasing day by day. It's just that we people have less knowledge about it. So many of the traditional donor countries face government budget constraints. So the private is expected to play a major role. Until and unless private doesn't comes into picture, public won't be able to help. Neither the government would be able to help, nor the public. So the private sector can be the primary source of fund for green growth, but it does require profit that are adequate for the risks involved. So they should be knowing what exactly the profit is there, what the risk is there, so that they would be able to invest in that freely. So to ensure that the adequate risk adjusted rate of return for the private public, the public intervention is also required. So like I mentioned earlier, that combination of both the public and the private is required to enhance green finance. So the possible options are risk mitigation by public and private finance, taking funding risks through a tranche approach and improving the investment climate in the host countries. Moving further to the next slide, it is issues lead to green financing gap in emerging economies. So what exactly it is? So the very first point is to need to formulate a clear set of definition about what companies and industry are in order to enable green credit. The second point is enhancing the big banking regulators, supervision of commercial banks, and environmental lending practices. The third point is promote public environmental awareness. Until unless awareness will be not there, people will not invest. Similarly goes with the private institute as well. So education create to improve environmental information database, enhance the information communication between the banking and the government sectors, and strengthen the disclosure of green credit information. The next point is help the commercial bank to establish enterprise environmental risk assessment system. And the last point, last but not the least, is the strengthen and adapt them in accordance with the whatever is in the local settings. Moving further to the next slide is the green loan. So what exactly is a green loan? So it is a form of financing that enables borrowers to use the proceed to exclusively fund to an environmental object. So green loan is similar to a green bond. There is no vast difference, but there is a slight difference between the same. That in that it raises capital for the green eligible projects. However, in a green loan, it is based on a loan that is typically smaller than a bond and done in a private operations. So moving further, which is the green bond, which I talked about earlier, that green bonds are designated bonds intended to encourage sustainability and to support climate related or other types of special environmental projects. So it was designed to provide funding in the form of $2 billion worth of AAA rated bonds issued by the US Treasury to finance environmentally friendly development. So what exactly is the objective? What is the objective of green bond is to reclaim the contaminated industrial and commercial land, that is brown fields, and encourage energy conservation and use the renewable energy resources. So in the private sector, what happened? In the private sector, the green bonds was issued by the Berkshire Hathaway, which issued bonds to finance in a solar farm in California. It raised to $850 million. Moving further to the next slide is greenwashing. Like Shubham mentioned earlier regarding the greenwashing, so what exactly is greenwashing? So greenwashing is a process of conveying a false impression or providing misleading information about how a company's products are more environmentally sound. So greenwashing is considered as an unsubstantiated claim to deceive consumers into believing that companies' products are environmentally friendly. Nowadays, many of the frauds are happening which used to do that. So similar example for the same is the China's controversial, which happened the Three Georges Dam race, right? Over $840 million was for the wind power projects were utilized in this, and ultimately it was a good example of greenwashing. So that's all about greenwashing, green finance. I hope you guys understood. Thank you.